It's a good time then to welcome on board some of the mid-cap and small-cap managements which have been driving the small-cap index as well. We got the Q1 update from V2 Retail and the management. Mr. Akash Agarwal, the whole-time director of V2 Retail, is joining us to talk to us about just that. Akash, hi, good to be speaking with you. This number of 57% revenue growth is quite stellar. Break it down for us. Is it just a very strong momentum in terms of demand and sales which is driving it? Is it also the impact of the new sales, new store additions?
Hi, thanks for having me. So we showed a remarkable same-store sales growth of 37%. So out of the 57%, 37 is the same-store sales growth, and the 20% is the new stores that we've added throughout the year. So yes, we have seen a huge shift towards value-driven purchases as people are getting more price conscious. So this trend has really played to our strengths as our markup is only 55%, which is one of the lowest in the value fashion industry. Hence, you're seeing these kind of numbers.
And you expect this kind of growth rate to continue given the value trend that you're talking about. A, what does it mean with respect to your margins going forward? Will there be a crunch? And secondly, is this kind of run rate, let's say 40 to 50% growth for entire financial year possible as well?
So if you look at the overall top line numbers, yes, we are targeting a 50% growth this year because we are planning to open another, I think, 50 stores in the next 12 months. So this trend should continue. But if you talk about SSSG, then of course, when the base becomes higher, we cannot achieve the same kind of SSSG. But even if we achieve a 10% same-store sales growth going forward, it gives us a much better EBITDA percentage now.
Okay, so much better EBITDA is maybe that one could watch out for also. 50% growth in FY25 is what you're targeting. I just want to understand also in terms of the demand trend, like value fashion is doing well. But what is the demand specifically in tier 3 cities or smaller towns? How is it over there? Are you seeing higher traction from those cities?
So, as you can clearly see with the numbers, we've seen almost a 40% increase in the footfalls, even in tier 2, tier 3 towns. So I guess it's also a result of our hard work and our efficient supply chain. We have maintained very high level of stock availability, and I think we are meeting consumer demand very efficiently and promptly. So it's very hard to say whether it's sector specific, company specific, or it's an overall demand uptick in the whole sector. But we have seen a strong demand for the last, I would say, 9 to 12 months.
Okay, surely, so good traction is at least what we're seeing across the board and across the cities. You know what I also want to know, Akash, is in terms of segments, right? Like according to what segment are you going to be focusing on? Whether men's, ladies, kids, how do you see the contribution changing? Do we see higher contribution coming in maybe from the lifestyle side now? How is it going to be moving for the company in FY25?
So apparel for us is about 93%, and menswear is the highest contributor. It's about 40%, and kidswear and women's wear is 27 each. And the good thing is we have seen a strong growth across geographies and across categories. But within the women's wear and menswear, we have seen a shift where, instead of denims, now cargos are doing much better. Similarly, like instead of woven shirts, now knitted shirts are doing better. So there are certain fashion and trend changes, but we have seen the growth across geographies and across categories.
To dig deeper, when you said you're looking at opening a total of 50 stores in FY25, largely your store count right now is concentrated in Bihar and Uttar Pradesh. Are these the geographies you're going to target as well? And what's the overall capex required for all of this? Are you well funded? Are you going to increase your debt? Are you looking at for some sort of equity dilution, QIP, etc.?
So yes, we are looking to open stores in the similar geographies that we're already present in. So most of our stores are in states like Odisha, Jharkhand, Bihar, UP. So we are looking at a cluster-based approach where, even Karnataka is a very good market for us. So we are trying to open stores in geographies where people already know about the brand. And, it also helps us with marketing and logistic costs. And to open these 50 stores, we would need about 55 crores of capex, which will be completely financed through internal accruals. So there is no need for additional debt or any equity dilution for this.
Point taken, Akash. These were largely the questions we had for you. Thank you so much for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.